Hi, good morning. Welcome to my channel. This is Ali. Today we are going to discuss uh, the benefits, generative great benefits of the trade and their other uses, how to generate income with covered calls and other. There are a number of great benefits to cover all of calc options strategy. This approach to trading allows you to create reliable income from our stock positions while reducing the amount of risk that traditional investors face. In addition to generate solid returns, there are some very attractive tax advantages available to covered call traders. We will get into the trade shortly, but first, a quick review of how covered calls work. To generate income with covered calls, ideally we want to buy or already own quickly a quality stock that is fundamentally strong. It can be trading water or showing positive price action, but important thing that is we do not want to do this with the stock that are failing rapidly. Using income to offset losses is dangerous propositions. For every 100 share lot of this stock we call once call contract. A call option gives that owner the right but not obligation to buy 100 shares of stock at a specific price with a defined time period. By selling these call contracts, we are giving someone else right to buy 100 shares of stock from us at a specific price. We get paid sell this right with the which is the how we generate income from the platform. Here is the questions how we generate the income from the from this system. And on the expiration of the date, if your stock is trading above the designated price called a strike price, good. We must fulfill the obligations and sell our stock. But if the stock is trading below strike price, we get to keep our stock. We also get to keep the payment we receive for selling the options contract. The treatment covered call options. A tax treatment of covered call options is a very important in trading. As a general rule, payment you receive from the options country can be classified as reduction in the cost basis of the stock. This is important, especially when it comes to taxes. For instance, if you bought stock at $50 and sold March $55 calls against the positions of $3 per share, your net cost of your position is $47. And if the stock remains below $55, the calls expire. You should not have to pay taxes on $300 of the income. It means $3 per share multiplied by 100 shares is equal to a 300 that you receive the selling call contracts. Instead, if you now own shares to stock with the lowest cost, some traders continue to sell calls against their stock positions. This continually creates income in their portfolio while slowly reducing cost basis of their stock. When the stock is eventually sold, the total amount of gains will be reported as taxable gains, but there is a definite advantage in differing the tax liability until the position reaches long-term gain status or simply into next tax reporting period. The very best tax advantage for covered call trade is when you can hold the original stock positions throughout a full year. This gives you opportunity to sell 4 or 5, even 6 different contracts against your positions. It's up you to, but if you sell calls which are high enough strike price so that you are not obligated to actually sell our shares, then things get interesting. This means you can continue to generate income all year long and have income taxed at the long-term rate. It means the capital gains tax rate is 0%. Tax income single is 0 to $41,675. Taxable income is 0. Showing jointly is $83,350. Taxable amount falling separately 0 to $41,675. Whereas the other positions having 15% is something other. These examples, remember, short-term capital gains are taxed ordinary income according to the federal income tax brackets. For many investors in this can this represent significant saving, potentially much as 25% to 35% potential tax liability depending on your tax bracket. This is also makes a significant difference when you look at the long-term return rate of your taxable investment account. The key here is making sure that you are able to hold on your original stock to entire 12 months period rather than selling with a gain before 12 months are up. Whereas the very creative approach is next keeping in mind it never makes sense to stick with a poor trade simply for tax reasons, and we are not tax professionals, but there are some tricks you can use with strong covered call options trades to extend the life of the positions and potentially hold for long-term gains. There are times when we covered call options trade higher and strike price means you are going to be obligations to sell your stock when the call contract expired, but let's say stock is still trading in a healthy partner and there are call contracts expiring further down the road that are attractively priced. And technically speaking, you are simply setting up a new covered call positions with same stock, but you may not realize that when the original call expires, you can choose which block or stock to expire them against. So in this case, you could sell second lot of stock that would you purchase at a higher price and keep your original shares. In all likelihood you will recognize an accounting loss on this second block, which is a good for tax purpose, but you are still holding your original positions with much lower cost basis. Using this strategy allows you to keep your block of stock with the lowest cost base. It also differs your tax liability until you have out it long enough. Quality of the showing is very, very good. We are closing thoughts. It means you are really want to step up your trading and game, we then need to turn to our colleague Jan Ping. There is the offer course. You should speak about your content, about your individual situations before implementing these taxes deferral strategies in your account. There may be existing circumstances that would be important to know before using option strategy for tax purpose. Uh, or I recently sat down for tell all-in interview about his multi-path Capagon trading system, and there were the things you will learn about his waterfall trading technique that allows you to generate instant payouts from companies like Netflix again and again. Strategies like this could lead to thousands of the dollars per month in the extra income. Thank you so much. Have a good day. Please stay safe. Next sessions we are going to discuss criticisms of trade. Thank you so much. Bye bye.